Hello guys, welcome back to this video. This is another trade breakdown using top-down analysis. So let me just run you over what happened here on this drawing to make it clearer of which market are we dealing with in this situation. So what happens is that Euro USD, AUD USD broke structure here, and then it broke structure here, then it pushed down a little bit. From this move to this move, this is not a 50% push down. So above everything it pushed, and then it caused another break of structure here, and then it moved. Then again it came back, changed the character on the downward side, came back deep down, swept the lowest low of this whole price move from this point to this point. Therefore this break of structure here is automatically shifted to this break of structure down there, and this becomes one price leg move. That becomes one price leg move. If you know how to mark real true market structure, true market mapping, you can check in the video if I've already uploaded. Just check true market structure mapping. You will know how to transfer this. So all these transfers, this becomes one leg. From this point, this becomes one whole leg. Came back, so it came back again. Then instead of breaking structure, it just wicked it out. So I want you to note what happened here. It came down, pushed back, pushed down a little bit, and then came back again, then pushed down, causing another break of structure here. Then what happened? It came wicked out of this low. Then what happened? It changed character here. These are very detailed and are not newbie friendly, so check correct change of character and you will know. And you need to also know pullbacks. So for you to know pullbacks, you will be able to know that this is a change of character. Therefore, when this week took it, automatically the next day we are going to be buying. So again here it changed character somewhere here, and immediately it changed character again up here. So with that in mind, this is how the market moved until this point, and then again it changed character here. But why do we say change of character here? Because it's sustained. If it doesn't sustain like this, it was supposed to take this low and immediately broke this high, but immediately this low was taken, and then it failed to break the high of this. This became a change of character. So some people call this IDM. This becomes a change of character, whichever way. And now the market is now selling downwards, breaking structures on the downward. So you can see the market caused a change of character here, or break of structure here, pulled down, and then it came back, tapped on this supply zone, respected it, so this order flow. Then immediately it caused another break of structure down here. So this was a break of structure. If you know how these details work, you will clearly know how the market is moving, and that is something that took me a lot of time to know. So ideally I'm expecting another pullback, which by the time I'm recording this video, this is on a Saturday, so I'm expecting another pullback, and then we go down. So if this does not sustain, we take this, we know that we are back to being bullish. So I'm expecting it to go and come and take this low, but I don't pay attention to that much detail. What I'm interested in is the order flow and that is what makes the market move. If you check, I've broken down this buy, this sell here, this sell here, and again this day we were also expecting sell, so we just mark the high and low of this daily candle. As you can see, this daily candle is small, but it gave a trade of more than 1, 2, 3. So it doesn't matter how small the daily candle is, provided it gives the sales that we need. So you need to know the requirement under which I trade. So I'm expecting sales until the market will prove me wrong, or will give me a stop loss. That is when I'll know it is time to pull back. But if it doesn't give me stop loss, I just know that we'll just be continuing down until the day it will give me stop loss. Like in this case, just mark the low, continuation, low, continuation, low, high, continuation, low, high, continuation, then it came here, low, high, doesn't take. So if it doesn't take like this, you can even trade internally. So this was buy, the next one should have been a sell. It took the low of this, which was nice, but the problem is that it closed bullish. So if it closed bullish, you can wait the second day, or you can take a buy, which did not work maybe on the 4 hours time frame, and then it came, took this low. When it took this low, immediately it confirmed that it wants to keep going down. So the next day we were supposed to be selling, then we sell the next day, then we sell the next day until we are wrong. So the next day it breaks this, so it doesn't take this out, but this would be common sense. I would like to watch more, because it really pulled back heavily. So as much as I'm expecting sales, I would really try and watch what the market is doing. So it breaks this immediately, it breaks this. The next day I'm expecting sales, the sale does not play out, it breaks the high. So the third day is always high probability sales, high probability trades in that direction. So this becomes a buy, because it even changed character over here. This was buy, this was buy, this becomes buy. Now that is the same thing here. This was sell, this was sell, the next day becomes a sell. Now this was sell, this was sell, the next day becomes a sell. You can see it took the low of this, so that means trade was provided. Buy, buy, the next day is a buy. Sell, sell, the next day is a sell. You're expecting a sell, took the low of this. The next time you're expecting sell, but instead it breaks the high. The next time you're expecting sell, it breaks the high. So this closed bullish, so I'll try and watch more. So such kind of situation whereby the market is now just playing around with you, but trades are there. So back to what we are supposed to be doing. We are supposed to be selling. So what happens is, let me get my markers, so that let me get a trade breakdowns, so that you can be able to know what you need to know. So what you need to know is this, or they're here. What you need to know is, you need to know, if you want to trade this strategy, you need to know what? You need to know the following, and then at the same time, these are my break. I always like to have rules, so that I don't veer off too much away from my trades. So these, you need to know 4 hours fractal order flow, you need to know basic market structure, IDM, basic supply and demand. These things, all of them, I'm shooting video. If you are watching this video past 1 week or 2, just check this individual videos. You will find a detailed breakdown just like this top-down analysis video. So once you have that, so we are expecting sales, external range marked in 1 day, high, low marked, nice. We go to 4 hours. We go to 4 hours and mark our trades. So we've already marked the high of the day and the high of the low. This is daily high and this is daily low. So we are expecting this low to be taken. So we will be only looking for sells. Simple. So anything else, we are not interested in buys. Even if it wants to buy, we are willing to take stop loss. If it wants to buy, we are willing to take stop loss, because we know it will be pulling back to this point. By the time I'm talking to you, when the market has already pulled here, so, and it has even closed on it has closed bearish on Friday. So I'm expecting to sell and take this low again. Something that happened here. Are you seeing the way this day this was on a Friday, it closed bearish. So the next week on Monday we just sold, we just kept on selling. So that is what happened this Friday. I'm recording this video on Saturday, so I'm expecting on Monday to do the same thing and sell like I did here. So I've already marked my daily highs and lows. I'm only looking for sell. That is how simple I get my daily bias. So let me see, I start chatting at 9 a.m. my time, that is 1 hour to London. So let me carry forward. So this was midnight candle, then we have 4 a.m. candle, as you can see. So the next candle I'm expecting is New York candle, sorry, London candle, that will open to London. So let me now mark my internal range in 4 hours fractals. So if I check this market, what happened in this range? What happened is that the market sold, then again it started buying, that is why it pulled here, and then it sold, and again now it is buying. So if you take this out, you will see that my fractals are here. My fractals are here. So this high is extremely protected, and therefore I wouldn't wish it to be broken. If it is broken, this market is back to sales, is back to buy, and that day it means I won't trade or I won't get entry because the market is just buying. So this is my protected high, this is my protected low. So this is my 4 hours protected high. This one should not be broken for this market to keep selling. This market should not be broken. That place should not be broken. Then this one is what I'm expecting to be broken. If it is broken, the sales are continuing. This is the weaker low of the day. So if it is broken, I'm expecting even more sales. So I've already marked that price factor, 4 hours fractals, price action. I'm only focused on this day. The same day when I came, I marked here high, I marked low. What happened is that the market came back and I found it pushing backwards, and then I found it to be have already started pulling down. This was 4 a.m. so this was my fractal high to here to here. I wasn't expecting this one to be taken. So if this one was taken, I was not interested in looking for sales until the high that took everything was taken here. So immediately it was taken, this high was taken, this low was taken here, and I just looked for sales. So sometimes you can take risky entries, like if this one was taken here, so you could look for this candle took the low of this candle. It means that now 4 hours is back to being bearish. So that is why you see this was a pullback and this was now a trade. So I would be waiting to see the same thing and mark and see how this low, if this low will be taken. Simple. If that low is taken, then the market shall have taken 4 hours fractal low or high that align to 1 day time frame. In this case, my 1 day time frame is selling, so I'm expecting the lows of this to be taken. As much as this may be liquidity point, I really don't want it to be taken, but if it is taken, it's okay. It will now mean that a must to be taken is a low. Otherwise it can just keep going, it can keep going like that, and I don't get trade and I don't get stopped out. Simple. So I'll be monitoring this. So what happens immediately? Immediately London, New York, London opens, it takes the liquidity, but we are still in the range, which is okay. We are still in the range, so sales are still valid. This is the high, this is the low. So this is daily pulling back before dropping. So I'll just move my candle here and see if I'm going to get a pullback. Now this trade was taken, it is there in my Telegram. I'm going to show you everything the way I'm showing you this analysis. I'm going to show you it was taken. We're just monitoring it like this with some few friends of mine who joined, and we are trading together. So I'm just monitoring 15 minutes, while also this is the 4 hours fractal. This is the 4 hours fractal low that I want to be taken. It should be taken down. Because we are still in the range, daily range, there's no problem. If we are right, it's going to play out. That is the most important thing. If we are right, it's going to play out. So 15 minutes, this is 15 minutes still taking out. We are just still playing in the range. If we are right, the daily can even be taken. This daily high can even be taken, because this is just building more liquidity. And if we are right, it's going to play out. If we are wrong, it's going to be wrong, and that will be the beginning of the pullback. So as you can see, what happens? This was you can see the daily high is protected. The low that I wanted to be raided has already been raided. And what can we see if we mark this? I'm going to explain that bullish candle. That day was CPI, so that becomes our IDM, and that becomes our change of character. I always like to see that. That is a must for me to see. I must see that the liquidity has been raided. If the liquidity has not been raided, I'm not interested in that trade, because it may mess you up. You will become the liquidity. So as much as London just ranged the Judas swing here that people are buying, and then immediately this this trade here was not ideal because everything did not check out. But in NZD USD and GBP USD, this the New York opened, gave trades, and therefore I shared for people who took it. I also took one in my pro farm, but the spreads were so high and therefore they stopped me out. But eventually it played. You can check my previous video of GBP USD. I explained how everything matched out. Everything matched out the way they are matching like this just before this news. So like in this case, news breaks everything, confirming that our direction was all along right. Our bias was all along right. So the market has already taken 4 hours fractal low that I wanted to be taken. This is a must. In GBP USD and NZD USD, they were already taken. That is why it played out well. This was just push. This CPI move just pushed price to take profit. Now monitor order flow in 15 minutes and note the IDM zones. This is my IDM because it never sustained. It came back, picked this liquidity, pushed back, but again this was the protected low. It violated, meaning that this is now not a break of structure but a liquidity sweep, and this becomes my change of character in 15 minutes. So when I get that, I just wait for pullback. As you can see, an added confluence is that the market has already pulled back 50%. So I'm also even in premium zone. So enter on second 15-second break. This was a little bit risky because there was no second break. This was just second break, but since I wanted to play with momentum, I just concluded that this was our first break, this was a second break. That can be subjective, like I always say in all videos, but this was good. So just go to 5 minutes. That's what I did, and started now looking for enter in second 15 minutes order flow, and look for supply and demand zones, and then enter on scopes. So this was my overall supply zone, but it's not a must that it must just tap on this supply zone. Sometimes it doesn't tap on supply zone. What I'm interested in is, provided it has tapped on the, how do you call it, on the fair value next to the order flow, supply value, fair value gap, sorry, that is next to the order flow. That is the most important one, because in most occasion price does not tap on sorry for that, that was internet problem and I was fixing it. So if you check on the 15 minutes, let me just remark the order flow. We check supply and demand. So my supply and demand was the whole of this thing here, this was my order flow. So it's not a must, provided it has tapped on the fair value gap here and we are above premium, I'm always okay. Sometimes it's even here. I didn't take the Euro USD because it just pulled back somewhere here but eventually sold. So personally I would like it when it is above here, and that is why I preferred this pair. That day I'm going to show you in my Telegram group. So go to 5 minutes and start monitoring order flow. Nobody says that it must touch the order flow. So we have that. That is enough pullback. So basically what happens here is that the market This was a little bit more aggressive. The market pushed down and then pulled back. So if it pushes back again, it will and breaks that low, I'm in. So this was a little bit aggressive. I don't recommend. Just wanted to get tight entry for a 1 to 3. That was a 8 pips stop loss, about 8 pips stop loss. So sell because this is the reason why I did so was because this was not ideally was not the second break. So at least a 1 to 3. So let's see. So immediately it broke, it tags you in, and you are now in trade. And then the good thing is even closed. So if it pulls back, I know I'm still safe. So let's wait and see. It didn't even pull back, and it straight away went to TP. As you can see, straight away went to TP. So even if you took it from somewhere here, it's okay. Sometimes I always just wait for it to break structure, and then just get a tap and an entry when it start to pull back. Just get an entry because the market is imperfect. But this would have given a 1 to 2, 2.5. Immediately you see these big things, just market is now ready for pulling back. So I wouldn't have targeted, if I took it from this point, I wouldn't have targeted a 1 to 3. I would have targeted a 1 to 2. But since I wanted to get a tight entry, I targeted there, and therefore I got, if this broke buy limit, it was ready to sell. So that was it, a 1 to 3. Now where is the trade? Here is the trade. AUD USD, this is what scope entry and tail, please. For those who don't know what scope means, check the candle and study it. It is the candle that closes in an engulfing pattern in your direction. So if the market pulls back, you get entry precision. So this was the trade, and let me see the outcome. This was the outcome. Last trade of the day. If you took this trade, please prepare to close. And as you can see, it went to TP, and that was it. I'm doing a breakdown of Thursday's market analysis on USD JPY, Euro, this and this, same concept. Everything is the same. That is it.